And I looked at that bill since the beginning of the Federal Reserve, which is the government institute that mandates or manages all of our currency in the US. So if I go all the way back to the 70s, and I look at it today, what do I see? I see that that $100 bill, if I just held it from then to now, is worth about $25. It's not worth 100 anymore. Why? Because of inflation. And so if we don't invest our money and we stick it under our mattress, then sadly the government eats away at it every single year, both sides, politically agnostic. And so we got to make sure that we put our money somewhere. That's why the stock market over time is usually what most people do.
Okay, makes a lot of sense. And what's the difference between a stock and a bond?
Okay, so stocks and bonds, 101. I think about stocks like a ability for you to have future upside of a company. So you are betting, in a way, on a company. You're saying today, the price of Amazon is $10. I think in the future, the price of Amazon will be $15. I want to go for that ride. That's called upside return. With a bond, what are you doing instead? You're saying, I actually want income. It's like a certificate. If I give you $100, I promise you, over the next 5 years, I'm going to give you 120 back. You're not going to make more if the bond that you invest in goes up or down in price. You're just going to clip coupons is what they're called. It used to be like that. So you're clipping the coupon. And the reason we want both of those is because, again, you want when the stock market crashes, you want your bond to still be clipping those coupons, baby, still coming in. When the stock market's raging, you want to capture some of that upside. And that's how we play right there in the middle of investing.
Is there a stage 3? So we did stage 1 is you, stage 2 is S&P. What's a stage 3?
Stage 3 is private. So if you're a real pro and you want to go for 303 of investing, that's where we start to do private equity. That's just investing in those same companies, but instead of them being traded publicly, those companies are now held by private investors. They'll never trade on a stock exchange. That also includes things like you can have alternative investments. That might mean investing in direct in real estate or investing in commodities, which would be like timber, right? You could bet on timber prices. That might be like equity and options. I think this generation got a little crazy because they were the first generation to gamify stock market investing and make it seem fun as opposed to serious. And they were the first generation that got easy access to things like options and warrants. And that's really actually only for pros. So I think anybody who's trying to tell you how to day trade, anybody who's trying to tell you how to do options, that strategy, think about that like somebody trying to tell you, let me teach you over the course of a couple hours of me speaking to you how to cut open somebody's brain. We just wouldn't do that. This is for pros. And if you really want to make real money, you don't do it by messing around at the margins of financial investing, in my mind. You do it by becoming the company that they invest in, which is stage 4. So that's when you're like, I buy the business outright. I raise money for my own business. And that's the next level of the game.
That's so great. I love that step by step because I feel for so many people, it just feels like this unorganized, messy, wild, wild west. And now it's like, wait a minute, stage 1, stage 2, stage 3, stage 4. I love those.